We move on now to the U.S. where stock index futures pointed to a negative open today as investors paused for breath amid a strong set of sessions seen on Wall Street. The previous trading day, U.S. equities hit record highs as optimism remained high ahead of the corporate earnings season. Markets have been outperforming as of late after President Donald Trump signed a bill in December to cut the corporate tax rate from 35% to 21%. On Wednesday, markets worldwide seem to be pulling back from recent highs as investors take note of the current market environment. Concerns have also been emanating for the bond markets as the benchmark 10-year U.S. Treasury yield rose to its highest level since March on Tuesday, surpassing 2.5%. Many well-known investors have warned that this could be signaling a new era for fixed income. Looking to Wednesday's session, speeches by U.S. Federal Reserve members, data and earnings are expected to be of key importance to investors. First off, mortgage applications are set to come out at 7 a.m. Eastern Time, followed by U.S. import and export price indices at 8:30 a.m. Eastern Time, and wholesale trade figures at 10 a.m. Eastern Time. Atlanta Fed business inflation expectations are also due out at 10 a.m. Eastern Time. In Asia, major markets there closed mostly lower today despite a solid lead from Wall Street overnight, but Hong Kong stocks bucked the trend and closed higher for a 12th straight day. In Japan, the Nikkei 225 declined 0.26% despite broad gains across auto stocks and financial plays. Major automakers closed with gains. In Seoul, the benchmark Kospi index edged down 0.42% to end at 2,499 points. Australia's ASX 200 shed 0.64% to finish at 6,096 points as most sectors recorded losses. Hong Kong's Hang Seng Index rose 0.2% to close at 31,073.72, its 12th straight session of gains. The index was also less than 900 points away from its all-time high of 31,958, which was set in 2007. The Shanghai Composite ended the session higher by 0.24%. Meanwhile, the Shenzhen Composite traded down 0.33%. And back here in Africa, Angola's Kwanza depreciated around 10% on Tuesday after the central bank abandoned its dollar peg, and traders say the currency would weaken further in coming months as it remained far from market value. The central bank sold 83.6 million euros at around 221.26 per euro at its first foreign exchange auction since switching from a dollar peg to a currency trading band. The Kwanza was trading at 199 per euro prior to the auction, resulting in a 10% devaluation at the sale. The relaxing of currency rules is the latest in a string of policy and personnel changes since President João Lourenço came to power in Africa's #2 oil producer in September. And Algeria has temporarily banned the import of 900 products, including cell phones, household appliances and vegetables, on a bid to cut a ballooning import bill following a fall in energy earnings. The OPEC member has been trying to cut spending since crude oil prices started falling in mid-2014 and it relies on oil and gas for 60% of the state budget, but earnings from the sector have halved since oil prices collapsed. The import ban, which took effect on Sunday, also applies to furniture, all vegetables except garlic, some meats and fruits, cheese, chocolates, pastries, pasta, juice, bottled waters, and some building materials. It replaces an import license system introduced 2 years ago. The value of Algeria's imports fell only 2.1% in the first 11 months of 2017 from a year earlier to $42.8 billion. Under the new ban, the government hopes the import bill will fall to $30 billion this year from a projected $45 billion for all of 2017 and $46.7 billion the previous year. And the Democratic Republic of Congo is preparing to more than double a tax on 2/3 of global cobalt supply, potentially increasing the cost of the critical battery metal just as the world begins to embrace electric vehicles. Congo, the world's biggest cobalt producer, will increase the royalty miners pay on exports of the metal to 5% from 2% if it opts to categorize cobalt as a strategic substance. The new classification is part of an overhaul of mining legislation that is fiercely opposed by the industry, which says the law may deter future investment. Under the revised code, backed by the government and being scrutinized by Parliament, the tax on base metals, including copper and cobalt, will increase to 3.5% from 2%. And a global internet and entertainment group and one of the largest technology investors in the world, Naspers Limited, is in talks to lead an investment of as much as 2.5 billion rand in India's Swiggy to increase its stake in the online food delivery company. Africa's biggest company by market value plans to team up with China's Tencent Holdings Limited to put together the new financing round. Naspers owns 33% of Tencent, which drives profit growth at the Cape Town-based technology and media company. The talks came after Larry Lee, the head of Naspers' new investments unit, told investors at a meeting in New York in December that order volumes of Swiggy have more than doubled year on year and that the global food delivery industry is still at an early stage of development.